Okay, so we're going to start the pullback buy tutorial today. The first thing I want to talk about here is to put this in perspective and to have you understand that these pullback buys are meant to be applied under specific conditions, okay? It's really important that you use these qualifiers to get yourself into a framework that's going to allow you to be able to not only increase the probability of success, but to also to be able to know what to expect, to know whether things are working on schedule or not, whether the proverbial train is coming in on schedule or not. And the only way you can know that is if you really start to put yourself into a framework and you understand the way normal activity is supposed to happen under these particular conditions and what abnormal is. If you just go out there and you're just trading the markets any old time, and whether the stock's in a downtrend or moving sideways or an uptrend, and you really don't have any rules, you won't know whether something's acting normal or not, because under certain conditions normal might be something different than under other conditions. So of course, most of this, most of you know, and if you don't, I cover all this in my book, and we talk about this here from time to time. But you want to be in a stage two uptrend. So that's the first thing, is that you're in that stage two uptrend. Once you're in that stage two uptrend, you're going to be looking for that consolidation or that base to occur. All right, and the earliest time that you're going to want to get on board any of these stocks is what we call the 3C, the cup completion cheat pattern, and that can be a low cheat, a cheat in the mid third, and then as you get near the new highs and in the upper third, it becomes what would be the classic cup with handle. Of course, this isn't a tutorial on that stuff, but I'm just going to give you a quick overview on perspective here. So we're using the pullback buys, because I know I have a lot of people ask me, is this a pullback buy and the stock's in a downtrend and it's below the 200-day moving average, and they're applying it in the wrong area. It's going to be just on this right side of the base, okay, as it comes from the cheat area to the handle, and as it runs up that right side, I have a few areas that I'll apply either the pullback buy or a combination of the pullback buy and the breakouts. So you don't always get all of these. Sometimes you get a pullback buy and it just takes off and doesn't really give you that little tight pivot that you're going to want on the right side. It might be something that pulls back and starts forming that cheat area, and then as it comes up off the right side, you buy it. Sometimes you get the pivot and you can add to your position. Sometimes you get a cheat and you don't get a handle. Sometimes you don't get a cheat and you get a handle. The whole key to all this is to have a whole bunch of various techniques that as you go up this right side, you have a whole bunch of ways to get on board the stock before it starts making a big move. Now, a big move, of course, for a day trader is going to be different than a big move for a long-term investor, and a swing trader would be, of course, in between the two. So that's a relative term, but regardless of the time frame, you're going to be using it the exact same way. All right. So you have the 3C, or the cup completion cheat area, which will be a low cheat or a regular cheat. You have the handle. You have what we call a cap. That's when you break out and then you pull back to the breakout, and sometimes you'll form a little VCP, and from there you can get a pullback buy, and then sometimes I'll buy the first pullback to the 50-day line. And I'm going to show you something or a few examples of that today also. Now, what you don't want to do, okay, is you don't want to be operating on the left side of the base. So, for instance, this is what we call compression, time compression, when the stock shoots right up off the lows and has not been able to form enough symmetry, and basically symmetry just means time. You know, a stock needs to go through time and form these bases. There's a reason, because you're having stock actually change hands, and there's a large force behind the bigger uptrend, and that short-term pullback within that uptrend, these are all continuation patterns, is being absorbed. Those weak hands that are selling and taking those short-term profits is being absorbed by that longer-term uptrend, which is some of the bigger players that are having a longer-term view on the stock. You want to wait until all that has changed hands and it's been absorbed, and that forms the line of least resistance, of course. And the main thing is you want to be using these on the right side, not on the left side. Not while you're in a downtrend, while you've established a new uptrend. here's an example of how that would look and how you would not want to use this. So for instance, here you turn up, you pull back, you turn up, you pull back, you turn up, all within the context of a downtrend. Now once you start coming off the lows and you form that right side, now you can start applying those. Is right here you have a buy point here, that's a pullback buy. Here's another one, and then this one is a little bit above the breakout, but again on a natural reaction. I'm going to go over this, don't worry, in more detail in just a minute here. So I'm just giving you some perspective. So when you use this pullback buy on this right side, generally what you're going to be looking for is a few days of pullback to sometimes as much as a week or two. Usually they're 3 to 5 days. They might be 6 days, could be 8 days. What normally happens is you'll get the pullback for 3, 4, 5 days, and then sometimes you'll even spend a few days going tight around the bottom here, and you'll form a pivot. I'll show you some examples of that in just a second. But there's two types of entries that I use. Okay, one is called the two-step entry. The two-step entry is very simple. You pull back, and then you'll usually get some type of reversal. All right, sometimes reversal where you close either at the high or sometimes in the mid of the range, but you'll get some supportive action off the lows. And the next day, the stock will trade lower within the range. Usually we like to see it hold the mid of its range, but like recently we saw that NEFF where, and it wasn't a pullback buy, it was a breakout buy, but it still traded below the low of the range and then ended up breaking out above it, and that was an engulfing day. But that can happen, but it's rare, and it lowers the probability. What I like to see is the stock pull back, and then intraday, when it takes out the previous day's high, so it'll go from looking like this to like this later in the day, that's where the buy point is. So you start buying it just as it takes out that high, and then you could set the stop at the previous day's low. Although I'm going to give you a caveat to that, but I'm going to hold that off for a little bit, and I'm going to show you a little later. So there is a caveat to setting the stop at that previous day's low, but that's sort of the textbook, starting point is to buy the two-step and then set the stop at the previous day's low. Now, there's another setup that I call the three-step. The three-step would happen in the exact same way. The only difference is in the morning, sometimes you get a little gap up. Now, it's probably not going to be a big, you're not going to want to use this if it's a big gap, because then the range would be too wide and it would be risky. But if you just get a little gap up or it trades above it for a little bit and maybe you don't want to chase the gap, very often they'll gap up and then they'll come back in, and then it'll turn from this, it'll look like this. Maybe this is 9:35, and at around 10 o'clock it looks like this, and then later in the day, maybe it's 10:30 or it's even 2 o'clock in the afternoon, it takes out that high, and that becomes your buy point, is the high of that day. This is a little bit lower probability than the two-step. The two-step works a little bit better, and this will increase your risk a little bit because now you've paid a little bit higher for it. So that previous day stop, instead of like the previous example where it was, well, actually it's 5% here too, but it actually should be 1% more in this example. So for instance, let's say it was 4%. Well, now you paid up a little bit, so now it might be 5%, but you're going to buy the breakout above there. So that's the two-step, and that's the three-step. And pretty much all my buys on the pullback buys are based on either the two-step or the three-step, with the exception of sometimes we have some days that it goes inside and it gets tight. I'm going to show you how that looks. So here's a perfect example, all right, with Gildan Activewear. I bought this stock right here. Now, as it's forming this right side, and you see, I'm going to zoom up a little bit. You see right here, you get that supportive day, right? So it goes, let's see, 1, 2, 3, 4, 5, 6. This is the 7th day. So now it doesn't, it tries to start the two-step on the next day, but it never breaks out above the previous day's high. But you see how it goes real tight, and that forms a little 2-day pivot. So that's fine. Once it breaks above there, you can buy it. You can actually use a breakout strategy as it gets above that pivot, just as if it was a cheat area or anything like that. So that's the caveat, where you may not necessarily go the next day. Now here we break out and then we pull back right to the breakout point, and you see it pulls back for a few days. You get that supportive action right there, and then the next day you get the two-step. See, it pulls in a little bit. I'll zoom up a little more. Pulls in a little bit, and then as it takes out that high, that's where you would buy. I bought some here, and then I added to my position right here, and then the stock went up quite nicely from there. So this is Yelp. Now, sometimes you'll get where the stock will form a pivot and maybe you missed it, right, for some reason, or maybe it just wasn't as crisp enough for you or whatever reason, and the stock runs up for a few days, but then pulls back near the area that you missed it. Well, at that point, if the stock is still forming that right side and things are constructive, the pullbacks on light volume, maybe the breakout was successful and you had an expansion in volume. In this case, we pulled back 1, 2, see third day, right? And then you see the supportive action. It has a pretty decent close. And then the next day, it pulls in the range. And when it takes out the high, that's where you would have bought intraday. Now, this closed and actually squatted. So then you would just change over and look for a reversal recovery, just as you would do if a stock squatted on a breakout. Now, I know some of you are brand new, and I'm saying squats, reversal recoveries, 3Cs, all these terminologies, and maybe you don't understand them right now, but you will. Okay, as time goes on, you'll hear the vernacular, we'll show examples, you'll see live examples as we trade, and you'll start to learn this stuff. Also, you can refer back to my book, and if you really want to take this to the ultimate level, you come to the seminar in October, and we go over this stuff with a 400-page manual. So again, so we run up this right side off of there. You can see we get the reversal recovery, successful breakout, stock moves higher. And you'll notice also that, sometimes you don't get that tight pivot on the right side of here. It happened here. It was you got this like sort of high handle. So if you're getting in on these pullback buys, you're actually lowering your average cost in many cases. And you don't have to buy your whole position. Maybe you bought a little bit here because you weren't too sure if the stock was going to actually turn. So you bought a quarter of your position here. Then you got the pullback buys. It turns up from there. You buy another quarter and it runs up and it forms this pivot and breaks out from there. And now you add your remaining half. And now you've actually built your position from this point down to here. So you're right in between and you've lowered your average cost, but you've lowered your risk by scaling into the position, right? So this is just this zoomed up, and you just see here we pull back here and move above that high. Let's take a look at, this is Del Monte Foods. This is another one. Now, this is a stock that I missed on the breakout for whatever reason. I don't remember, but I remember that it broke out, and then I saw it like, here somewhere, and it was really perfect. It came out of this perfect little tight pattern, and I had missed it, but then it had 4 days up, but then pulled in. And I think the market had pulled in, so I figured, maybe the market's holding it back a bit, and if I can get myself a pullback buy set up here, I'm buying it right where I should have been buying it in the first place. And it also tells me that, when this stock pulls all the way back to this breakout point, it really should pretty much hold that area. It shouldn't come off by much more. So I'm really buying very close to the danger point as well. So it's a pretty good spot to buy a pullback buy if you can get it near the breakout. As long as you're not coming out on low volume and then it comes crashing down on high volume, then you want to stay away from a pullback buy. Remember, these pullback buys are only as good as as putting the whole thing into perspective. So you're still going to want to see all the things that you would normally want to see. Pullbacks on light volume, natural reactions with tennis ball action, all that stuff is still going to apply regardless of whether you're using a pullback buy or a breakout. So here you can see we pull back 1, 2, 3, about 4 days. And in this case, you see, again, we go sideways for these 2 days, and it forms that little 2-day pivot. And then from there, as we pull into the range intraday, when we take out the high of those previous 2 days, that becomes the buy point. And this had a pretty decent close. Now, this is just zooming it up a little bit and showing the after effects. So right there, right here is where I was buying it. And then you see it moved right up from here, and now I got myself at a profit. And that creates a lot of flexibility because once I get myself at a profit, I can now move my stop up to break even, and I'm free rolling the trade. Here's another one. This was LGND, of course, ligand, I guess they call it, pharmaceuticals. So you can see here that and this is not exactly this. This is drawn in just to show an example, but you can see how we get very tight here as we break out, then we pull back, we tighten up, volume comes in considerably. See, you just want to see all the same same characteristics, and then as we turn up from there, we're moving through this multi-day pivot. In this particular case, you see we get a 1, 2, 3, 4, 5-day pullback, 1, 2, 3 days. So we actually form this little 4-day pivot. And then you see the two-step? We pull into the range, and then when we take out the upper range there, that's the point of action. Some of these, as you can see, they say Master Trader Program, are actually some charts that were taken from the workbook of the Master Trader Program. Now, here's a stock that gapped on earnings, created a pullback buy, but earnings were coming out. Now, you can use it on a gap. The thing is that, and I wouldn't buy a gap and a pullback buy unless it came on maybe a really great earnings report, and then the gap wasn't too big. But again, like this particular situation, it gapped up and then it just kept moving. So if you're going to buy a pullback buy on an earnings gap, make sure the gap, you're not paying up for it, so you create a big negative space that it might have to fill and put you at a big loss right away. And then you're going to want to see it move right away in your direction. So like any other situation, I'd probably set the stop just below, these lows right here. Here's another post gap play. So in this particular situation, the stock had already gapped and then moved sideways, went into a natural reaction. So sometimes I'll use a pullback buy to buy a natural reaction. So maybe it has earnings and I'm not willing to go in and take the earnings risk, or it gaps too big for me to buy it on the earnings. So then I wait for it to settle down, and if it can hold up and it doesn't come crashing back down and it holds pretty well, I might play that natural reaction. In this case, this is a stock that I did do that with. Many of these are examples that I actually traded, most of them. Again, another thing I wanted to point out to everybody, and I tell everybody this at the Master Trader Program, when we have this workbook at the Master Trader Program, and the same is for whenever we do these tutorials, 95% to 98% of every example that I show you is not Monday morning quarterbacking. We're not going and saying, oh, let's go find some charts that show what we're trying to say. These are all situations that we traded in real time. Even the ones that I trade in real time and maybe I got shaken out of and were unsuccessful, I even bring those up because those are even more important. If I mishandled something, sometimes I buy a stock, I buy it just right, then I get knocked out of it and it goes and becomes a big winner. And okay, well, did I sell for some reason that I shouldn't have, or did I do the right thing and it just got bad luck there? And then there's other times where, of course, I buy and it doesn't work out at all, and it doesn't turn into a winner. And so I'm always trying to look at not only my mistakes but operate from reality of what we're actually doing in real time. So we're only seeing this. That's we're seeing that when I'm buying it. When I'm buying the stock, I don't have the benefit of this hindsight. You could say, oh yeah, well, it looks great. Of course, that's a spot to buy. Yeah, now that you see this. But we're not seeing that. So we're doing this in real time, and that's what you have to get good at, is learning how to spot it in real time. This is that pullback buy right here. And then it just rode the 50-day. You could have moved over to the break-even plus rule, the 50-day break-even rule, and this would have held you in for quite a ways. Okay, so here's motivation. So this is where we trade near the danger point, where you may break out of a base, you pull back to it, and now I really want to see this hold. I don't want to give this a whole lot of room from here because I'm pulling back to this base, and you can see 1, 2, 3, 4, 5, 6 days pulls back, and then forms that little 3-day pivot. See, a little sideways move, and then it comes in to the range. See the two-step, and as it turns up, that's where you want to buy that right there. So you could apply this to pullbacks on the right side of the base. You could apply it to base breakouts that pull back after the breakout. Now I'm going to give you that caveat. Remember I talked about the caveat as far as setting the stop at the previous day's low? So that's sort of the textbook first base way of doing this. However, what I like to do is I like to get into these situations where the previous day's low is so close to where I'm buying that if I let it go below that low, it would be small enough that I could actually let it undercut that low by maybe 1, 2, maybe as much as 3 or 4%, and I could still stay in the trade. So what I'm saying is that I would allow it to undercut the low and maybe give it a little bit more. So in this particular instance, you can see this is forming the right side here, right? We don't really get much of a pivot right over here on this right side. So it runs straight up, forms this handle. As it starts to turn up, 1, 2, 3, 4 days down, we get the little two-step, right? I'll zoom up on it for you. You get the two-step. Now, it pulls in for a few days and it undercuts this low by 2.7%. Well, I'm usually willing to risk anywhere between 2 and as much as 8 and even 10% sometimes, but very seldom. Usually it's between 2 and 8%. So a 2.7% pullback, I generally will stick with the stock if it's just pulling back lightly like this and I have a pullback buy and it's still intact. Now, of course, if there was some heavy volume, there was some violations, which is another subject, but if there's a whole bunch of violations, and then there'd be a different story. I would sell. I might even sell before it hits the stop. But if it's orderly and it's building that right side, I'd probably stay with it because it just hasn't come in enough. I would give it a little bit of room. So, and I factor in the shakeout. That's what I call factoring in the shakeout. So I may let it shake out that low. You've seen me do this time and time again where I buy the stock, it takes out that low, and I'm still in it. And you may say, well, why is he doing that? It undercut that low. Well, it's a very obvious stop, and a lot of people put their stops there. So I want to try to give the stock a chance to shake those weak hands out. And it's probably going to be, if the stock is really strong, it's going to be minimal. It's going to happen quickly, just like this. You see it just undercuts and then has a good close. So I'm going to be watching it very carefully. When it undercuts that low, I'm going to watch that day to see how it closes, and I'm going to watch the next day or two. Now, if it just keeps drifting off here and it can't rally, well, then I'm probably going to, I'm going to cut out of it. And you can see here, we then formed a little pivot, and you got just a perfectly formed VCP. So it's all in the process of building this right side. But so maybe you buy a little here, right? You don't buy a big position. So a 2.7% decline on maybe a quarter or a half position is really the equivalent of less than 1% or maybe 1.5% on a full position. Then as it sets up this right side and it comes out of the pivot point here, then you could add to your position, right? And now you're lowering your average cost. One of the reasons why I came up with these techniques was because as I grew my own personal account, I started to get to a point where I was having a liquidity problem, particularly in the smaller issues. So I had enough money where I could start moving stocks. Then I also managed money for a while, and I had an institutional service. Just like I do here, which I've done for the retail market now, I was advising some of the biggest hedge funds in the world. And these guys, when they like the stock, they go in there and buy 100,000 shares and keep buying 100,000 share blocks. So they can move a stock very quickly or crack a stock. So I started coming up with devising ways where I can get myself scaling into the trade and even getting in lower and lower within that right side, or just always trying to lower risk and to find more opportunities to get on board so I didn't have to make an all or nothing bet. So that's sort of how I developed these, and just over the years, I'm going on to my 34th year this next year of trading the market. So you can imagine over that time, these things just kept evolving, and one thing led to the next, right? So I always ask this, and most of you know the answer, but this stock at 931 gaps up here, and then it pulls in, creating a potential three-step. So the question is this a good buy if it takes out this high? And I'm going to give you the answer, even though most of you already know the answer, of course. If you're really looking and you weren't thinking reward, you're thinking risk, you could see that if you were to set the stop below this low here, which is a little above 15, and you're buying up close to 18, that would be a pretty big stop. That would be above 10%. So it wouldn't be a good trade. You see, you want to buy these as close to the risk or the danger point as you can. So that's the one thing you always want to measure. Whenever you're looking for these, measure the risk. And if you could measure the risk and let it undercut that low by a few percent and it still is acceptable risk, then it's a great trade. Even if it turns out to be a loss, it's a great risk-reward trade because you not only are getting in at a low risk, but you're able to allow the stock to fluctuate and knock out weak holders, but not knock you out. All right. Now, this can also work on the short side. Matter of fact, I almost prefer to almost exclusively trade shorts on pullback sells. So very similar, you're going to look for the same thing. Instead of course, an uptrend, you're going to look for a downtrend. Now, you may not necessarily have it in a confirmed stage 4 downtrend. All right, in this particular instance, and they work really good on base failures and pivot failures. In this particular instance, you have Massey Energy. Some of you might remember there was the mine explosion back in 2010. This is news that is not going to get the stock back on track, moving into new high ground in a day or two when a mine explodes for a coal company or an energy company, and lives are lost. So this stock broke hard, and as it followed through and then had this little dead cat bounce, usually when you have some kind of bad news like this, you're not going to get more than 1, 2, 3 days of rally, and you'll get some type of pullback short that will set up. And this really was just in textbook fashion. You could see, just like the pullback buy, you see the sell, instead of getting supportive action, you're getting liquidation, where you get that sell and it actually closes on the low for the day instead of closing near the high. And then look what you get. Instead of the pullback, the two-step on the upside, you get the two-step on the downside. In the intraday, it comes into the range, and then it comes through the previous day's low instead of the high, and that's your buy point, a very clean buy point. And then it set up another one here. You can usually do these around the 50-day, around the 200-day. They don't necessarily have to be at those moving averages, but if you have a base failure and it comes back to the 50, it's usually a decent spot to look at maybe putting one of these trades on. So this is F5 networks. See, big break on big volume. And then you get this bounce back, comes back to the 50-day as the 50-day rolls over, and you get that pullback sell right there. Now, the interesting thing, and one of the reasons why I like this particular example, is because you can see right here, it ran up, and you actually got a pullback sell here. Now, one of a few things could have happened. You could have actually went in right here and got stopped out here, and then it just formed another one, and then you would have had to get back in, which is the hallmark of a professional, is that you can get stopped out of a trade and then take that same trade over again when it resets. But in this particular instance, if you factored in, like I said, you factored in the shakeout, you may have still been in this, seeing as it just sort of very quietly moved up for a few days and was coming into the 50-day. This might not have even gotten you knocked out if this was enough room and you factored in that shakeout, like I just said, and maybe you'd even be adding to your position here. And again, these are the things that are going to take a lot of time to really be able to identify in real time. But if we do it together, you'll see some examples of it, and over time you'll get this. But once you do really get this stuff where it becomes second nature and you're able to spot this, it really is knowledge for life. It's going to pay you for the rest of your life. And it's something that is really worth the investment of you spending a number of years, and it's probably going to take you a number of years to get proficient at this. Maybe you can really understand it in a year, okay? But to really get good at this, it's probably going to take you several years. But that's okay. If it's going to then be something that you could apply for the next 20 years, it's well worth the investment. So that's what you always have to, keep in mind with this stuff. Don't be impatient. If it's not coming right away, I also want to say, speaking of, getting results and so forth, we've heard from a lot of people. Every year, of course, we get hundreds of emails, and we speak to hundreds of you, on every quarter even. But over the past several years, we just are getting more and more communications and emails of people that are really getting this. And of course, it usually comes from those of you who emails of people that are really getting this. And of course, it usually comes from those of you who stayed on the service for a year or two and put the time in, came to the Master Trader program, and really have worked hard. And I'm just happy to see that it's paying off for more and more people. We're just seeing more and more people getting this and really being able to do it well, which in the very beginning, we didn't have a whole lot of people that we were mentoring, and it was just in the early stages of anybody learning this stuff. So we didn't have a lot of success stories, but we're really hearing more and more, and it's nice to hear that those of you that are really spending the time to get this, to learn this stuff, are finally getting it in the last few years. Another thing about shorts, and is when you get V-shaped action. It's another thing you want to look for. you get a big break, if it's a very V-shaped recovery, meaning that it comes down and straight back up, that's another time where you want to really look at using that pullback sell setup. Because it's unsustainable. These V patterns are very unsustainable. You get that compressed right side. This is all stuff, again, that I know some of you are going, I sound like I'm talking Chinese, because those of you that are Chinese would understand that. But you know what you get my point. I sound like maybe I'm using vernacular that you don't understand, but at some point you will, as we go through this. But again, refer to my book. The book is the flight manual. The Master Trader program is basically what we would refer to as flight school, and this is flying in the cockpit tandem on the platform. We've designed it all to work together. There's a reason why I have these various products, and they're all been designed to work together to create a great trader. They're not by accident. It's not by coincidence. It's all designed. And now with the next book, that's really the volume 2, and you'll have the complete works from buying to selling, and all the position sizing and all that stuff. So that'll be good when that comes out. For those of you who have not gone to the Master Trader program or waiting until October, at least the book's coming out in April, and you'll get some more color on some of those things. Let's see here. So that's pretty much that's pretty much the pullback buy. Now I want to show you a few examples of how this has been applied recently on a few trades that I've done, a few stocks that have set up. Let's just even start with VAC, which is one that I just put on buy alert. I apologize, but I was going to buy this and tell everybody to buy it the other day, yesterday actually, as it moved through here. I didn't, but it really set up quite nicely. This isn't exactly a pullback buy on the right side. It actually formed a pivot, but it's a pullback to the 50-day. So this is your first pullback to the 50-day, and this is forming a low cheat, right? Very nice little low cheat right to the 50-day, and it's moved up from there. Now, how about in a base, like I was just pointing out? Well, I use this all the time, okay? I use this all the time. You'll see over and over that I'm buying, and a lot of people don't understand this. We've gotten a lot of emails where people say, well, I don't understand. You're buying before it breaks out. Well, no, not necessarily, and I don't always buy my whole position also on this. Sometimes I ease into it, but you see here we're forming the right side, and I've been doing this so long, I know I know when a decent right side is being formed, and I'll very often buy the pullback buy coming up the right side. Now, if you're new at this, I would not put your whole position on here. I would put part of it, and then if it forms a pivot, you can add to it and so forth. In this particular instance, you can see, I'm just going to zoom up too. Let's zoom up here. You see, so 1, 2, 3, 4, 5, 6, 7 days. Now, we didn't get that good close, but that's okay. You don't have to have that. It's I would prefer that. I would prefer that I see a good close on some volume, but we do get the little two-step, comes in, and then we get a squat, right? It tries to recover, barely recovers, but recovers the next day. So in a situation like this where it's building that right side, I just want to see this either move up from here or start to tighten up. See, I know what I need to see. I'm in a VCP building base period here, so I know that I either need to see an expansion here to the upside and this becomes that third T or however many T's it's in, or I need it to tighten and form another T, and from there break out of there, and that would just mean that the pattern's improving, and I would either add to my position, or if I didn't buy it yet, I would buy it there. Then it's just a matter of watching the stock and seeing if it's acting normal. So this stock moves up 1, 2, 3, 4, 5, 6 days in a row. That's great. Great news. That's exactly what we want to see. Check the volume. Volume's not that strong. Okay, so it's on light volume. That's not the greatest situation. Then we get this reversal. All right, that's normal. It ran up the right side, pulls back a little bit. Now this is where the rubber meets the road. All right, we would like to see this move right into new high ground. Little natural reaction, but it came off for a day and created a little shakeout below these recent lows. This really has to start performing now. All right, otherwise this isn't a natural reaction anymore. All right, this would start to be an abnormal reaction. So if I see this start to come off here, next day or so, and I see that, I'm probably out of it at this point. All right. I allowed the stock to be able to pull back naturally. I even allowed it to have a shakeout here, and which would knock out most people that are short term or intermediate term oriented. And now it really needs to come back here. I did this exact same thing with many of the other names that like FedEx and I guess one that not a pullback buy, but MLM. Now you could say this is kind of a pullback buy, but over here on this right side, let me just get rid of these notes, this stuff here. I let this come all the way down here, and it really started to get a little hairy here. But I told you, remember I just said the other day, I said, or on Monday, I said this has to start performing like right away, and now it is. And so the lesson here is the stop was over here, right? Some of you that may have bought this may have said, well, it's close enough to my stop. I'm getting out. It's going to hit it. Don't do that. All right. Let it hit the stop, because a lot of times it will go near the stop, but it won't take it out. And that's exactly what happened here. All right, I got a little off track. Let me go back to some of these. All right. So TECK. This is one we talked about on Monday, right? I forget who asked about this, but we had a member ask about this, asked if this was a buy point on the right side. I said yes, right here, right? So there's the pullback buy. See, it's forming this right side. You actually got right here, you got a little low cheat. It gapped through it, so I don't like to usually chase the gaps, but it was a low cheat, and you got a gap through there. Then now it's formed this cheat in the middle third, and you got 1, 2, 3, 4 days. It pulled back. You could even make a case for buying it on this day right here, which is January 20th. But certainly on the next day, there you have the pullback buy triggered, and then it starts moving in the right direction. So that's a textbook pullback buy. Netflix. Let's take a look at that. So, and you'll see sometimes I get very creative with this stuff. Like in this particular instance, I'm buying a low cheat right here. I bought a little here. Then as the stock came in a bit, I got stopped out of it a little bit. I cut my position in half, and then I added it back. So I jockeyed for position. But the point is that here's the pullback buy right here. 1, 2, 3. You see, you get a pretty good close, and the next day you get that little two-step. See how you have to really look carefully. It came in just a little bit, took out the high, and then it squatted. And again, this looked a little ominous there for a minute. You had the outside day, and then the next day was down. I had my second stop was below this low, so we didn't take it out, and then it shaped up, it tightened up, and ended up improving. So I added more shares right here, and then since then, of course, we got the gap up. We had the earnings, pulled a little off before earnings, so to lower the exposure, and then sold half of it on the earnings. Let's see what else. UNH. Oh, here's another way. I'm just trying to show you various ways that I use the pullback buy. Now, I don't do this often, but occasionally I will buy a natural reaction. So the pullback, it's after the stock breaks out, and I get maybe the first pullback after the breakout, and it may be a little bit above the breakout. It's just a natural reaction. In this case, 1, 2, 3, 4, right, 5 days down. You see, you get the supportive day, and the very next day, you get the little two-step, barely, I mean, just right at the open, started going. I get in right there. And now my risk is minimal because my stop is a little bit below the previous day's low. And then from there, stocks moved up. And I have some flexibility now. I allowed it to even shake out this low, come down to the 50-day. See, I allowed this. Only reason why I'm allowing this type of action, which looks a little bit ominous, is because it's above my buy point and I'm at a profit. So I could give it a little bit of room and let that first pull back to the 50 occur. Zillow, which has still been building this right side, but again, you'll see I bought it on a pullback buy. Let me show you the whole base first. So here's what I'm looking at the time. This is all I'm seeing on that day, right? So now I'll zoom up a bit. So we start forming this right side. 1, 2, 3, 4, 5 days down. You see how we form this little pivot here, this little sideways movement? So you're either going to get that reversal, or you might just go inside and form a few days. Right there, that's the buy point. And it pulls in. See, it pulls in a bit, and then it takes out the high, and that's right where I bought. You take a look, if you remember, that's where I bought. Now, this is pulled back a little bit here, and it hasn't taken off, but it's still building this base. And as of right now, it's holding up, and it's still okay. It's it's certainly getting to the point where it's going to have to, as they say, fish or cut bait here. So I want to see it get above this point right here, and that would be moving in the right direction. If we start breaking down from here, then this pullback, again, like the previous situation in AKAM, it's not natural anymore. It's starting to become unnatural, all right? So knowing whether you have a natural reaction or not is very important after you make these buys. Let me see. I think that's it. I know there was other examples, but I know I'm a little pressed for time. So let me just see if you guys have any comments, and then we'll move on. Okay, Bill, you're welcome. Looking at PEGA last few days, it looks like it almost met the criteria, but not quite for setting up the pivot. All right, so let's take a look at that. Hold on one second. So that's PEGA, right? PEGA Systems, PEGA, PEGA. Yeah, well, this is very simple. You know, it met the criteria. You know, you had the base breakout, right? It moves up, pulls back near the breakout, and now you're 1, 2, 3, 4, 5 days down. Now, and again, you didn't get that big reversal, but you see how you went inside and you formed that 2-day little pivot right here. You'll see this over and over. I mean, this is just occurs, you know, hundreds of times a day in various names. So right there. So as it moves through there, that's your buy point. Like I would like to see the volume come in a little bit more, but it doesn't always happen on the first day or so. These aren't as obvious as breakouts. That's first of all. The stock had been, you know, had been going down, so a lot of people are afraid to buy when the stock is, you know, pulling back. But we're not buying on the pullback. We're buying as it turns up. That's a very important thing to understand. You don't ever try to buy as the stock's coming in. You're buying as it starts turning back up. You don't want to buy it as it's coming in because you never know how much it's going to go down, if it's going to start opening up to the downside. You want to wait until there's some stabilization, either with a reversal or some type of multi-day, 1, 2, 3-day pivot that forms. And then from there, as the stock turns up, we're always buying at a higher price, right? We're always paying a little bit of insurance. It's a really important thing to understand. You don't want to get your goal is not to get the lowest price. It's to get the right price. All right. There's a fortune in that sentence. All right. The very important sentence. All right. The right price, not the lowest price. Let's see. Okay. If this appeared on a weekly chart, does it make sense to buy, or is the pullback buy only for daily? It's on any chart. Okay. The best setups are when you get overlapping time frames. So you're getting supporting time frames. So for instance, you have, let's say, a really good weekly that's showing a breakout from a big base, and on the daily you see a pullback buy on a two-step, and then on your intraday it's coming out of an intraday base. That would be your ultimate situation where you had all the time frames aligning. You don't always get that. You don't always get that, but you certainly want to always look at a weekly and make sure that you're in an uptrend. The weekly looks, you know, looks good to the point where it's not abnormal action. You know, you don't see the largest decline and the largest weekly volume that's happening on the week you're trying to buy a pullback. You wouldn't be buying that. So, but the answer is this will work on any time frame. It doesn't matter. These are universal principles. All right, they're just based on the law of supply and demand. The law of supply and demand doesn't know time frame. It doesn't know it's going to work no matter what. It's going to work any cycle, any time, 100 years from now, 1,000 years from now, as it worked 150 years ago, 100 years ago. All right, we've looked at this stuff all the way back to the late 1800s. It works through every cycle. You may say, well, then why isn't everybody using it? How come everybody's not rich from stock trading? And I'll tell you the answer I always tell everybody. Why isn't everybody thin and in great shape? They know, you know, you eat right and you exercise. Why is most of Americans why are most Americans overweight? Because of discipline. Because of discipline, because of commitment, because of all kinds of things that go beyond having the right information. Just having the right information doesn't mean that you're going to be great at something. You know, we could read books and learn how to toss a basketball properly. Does it mean we're going to become great basketball players? So it's all about being able to be disciplined, apply it, make a commitment, learn how to use it, master it, and commit to a style and not drift off of the style. And stick to something until you become really good at it. And that comes by getting rid of your excuses, making a commitment based on the fact that you believe in this stuff and you say, okay, this is a timeless principle. If it's a timeless principle and it's not working for me, then it can only mean one thing. I don't know what I'm doing yet well enough. It's not the system. It's not because it's not even a system. It's just the footprints of supply and demand. It's not my real system. This is just the way supply and demand, the dynamics of it. So you just have to learn how to take advantage of the dynamics of supply and demand to serve you. Um, let's see. All right. So are there certain conditions that make you look more for pullback versus breakout buying? If so, what are they? Yeah, which one sets up. I mean, if a breakout sets up, then I'm going to play the breakout. For instance, LOGI. This set up tight here. So I played the breakout. I didn't have a pullback buy. Some setups are going to, let's see, I'm just going to go through. I don't know the answer to this, but I'm just going to look at some of these things. So, again, here, this just went tight and broke out. Of course, it did squat, but I bought the breakout here on BERY. It had a base. It tightened up on the right side. I bought the breakout, and it didn't set up a pullback buy. So I'm just basically think of this as you're sitting there, you're waiting for the elevator, but you don't really know exactly what floor it's going to stop on, but you know you want to get to the 20th floor, and you're trying to get in on the first, second, third, fourth floor. So, as it goes up that right side, I think of the low cheat as the first floor, the cheat as the second, the handle as the third floor, and maybe, the breakout is the fourth, the pull back to the breakout, or maybe if, the buys that are coming from natural reaction is the fifth floor. So I want to now, but my speculation is that this stock's going to go to the 10th floor, the 15th, the 20th, the 100th floor. So I'm trying to get in on between floor 1 and 5 or a combination. If I get a little of my position on 1, 2, and 5, it's like getting in on 2. So I'm just trying to get in on that right side and have enough areas and enough techniques to get on before it makes a big move. That's the whole thing. I don't want to miss being able to, now, of course, I can't go in every stock, but the ones that I'm focused on, I don't want to miss getting on board if it indeed going to make a big move, and I've spotted that name. All right, let me see here. All right. So Chris is asking, if the down day that sees support setting up the pullback buy cuts down deeply, but the close is near the high, will you consider setting your stop above the low if you buy it the next day? Well, if that spike down, let's just say that spike down is 20%, and it closes up 20% off the low. Well, then obviously your previous day, that low isn't going to be your stop because it's 20% away. So that would be too much volatility. But then what that would do, you know, that would negate the whole base, because what would happen is if you got a base that, let's say, is a 30% correction and it's tightening up on the right side, if it had that much volatility, it would break the whole base apart. So all this has to be within the confines of symmetry, right? Like, let me show you here. See, it has to happen. These pullback buys have to happen within this right side as it's building the base. If it breaks that apart, then it's no good. So again, context and perspective is very, very important. All right, it's very important that you put this stuff into perspective, and that you go through the right steps. You don't want to skip steps. It's in a stage 2 uptrend. It's going through the basing period. You have to look for the VCP. Look for all these things that lead you to the buy point. Then once you get to the buy point, this is just an entry technique. But you've got to already do your homework, and the stock's got to be meeting a whole bunch of criteria to ever get to this point. Okay? So the answer is that, yeah, if that pullback or that spike is too long, then yes, you wouldn't be able to use that, and you probably wouldn't enter the trade at that point. All right, John's saying you showed an intraday chart earlier. What is the shortest time frame you typically use when deciding to take a new position? Well, I don't day trade. Bob does a lot of day trading. I do very little, if any, anymore. And at one time I did some day trading. I traded around positions, but I only go down to a 5 minute. I don't look at a 1 minute. It's too much noise. I go down to a 5 minute. So I find a 5 minute is good for intraday, looking at intraday charts. You use a 5, a 15 minute, I'm sorry, 5, a 10 minute. Some people even use a 60 minute, but I tend to look at a 5 minute for intraday. Let's see, would 10 days ago on VAC chart be a good buy point? So let's take a look at that. VAC BAC 10 days ago. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, no, absolutely not. And if this stock took off from here and went up 100%, I would say no. All right, that's nothing to do with the result. Just remember that. Whether it goes down or up afterwards, the result doesn't justify the means. The problem with buying right here, this is, I assume you're talking about right here. All right, so now the problem with this is that you just broke the downtrend. You see, it did not make the turn. It didn't form the cheat area or a low cheat. You want to get some type of little sideways action, and then from there, so that's your 1, 2, 3, if you will. Of course, I explain this in my book, and I explain it again in the new book. You don't want to try to buy a break of the trend, because what happens is, and I can't get into this. This is a really big subject, and it's called a redefining trend. A lot of times you'll break the downtrend, and then you'll come down and you'll just establish a new downtrend. And then you'll break that and you'll establish a new downtrend, and the volatility will just keep widening and widening. You're trying to get to the point at which the probability is high that the correction is over and that you're starting to get realigned with the longer term uptrend, and that intermediate or shorter term downtrend is now run its course. You need symmetry. Okay, that's first of all, and you need that time. You need that time and price. And the bottom line is that, if it was as easy as just drawing a trend line, everybody would be rich. And again, you could say, well, is it as easy as just looking for the VCP? Well, not necessarily. I mean, these things happen in a lot of different ways. They permute themselves, and they throw a lot of curveballs at you, and they require a lot of discipline. You can look in hindsight and say, oh, well, this was a great buy point. It went up from there. It never took out that low. Yes, but if you were to go back and you were to do as I have and look back for 100 years, and to go look at all the stocks that broke their downtrends and use that as buy points versus waiting for setups to occur on the right side that went through a symmetrical bottom and had those cheats and those 3C areas, you would find that the probability is way lower for the trend line breaks, as opposed to buying a little bit higher and paying that little bit of insurance policy. I'm talking a huge difference in probability. Okay, let's see, what was the potential pullback buy on January 7th, Berry? BERY. So let's see, January 7th is right here. Sorry, right here. Oh, there is no January 7th. I got the 6th and the 9th. January 7th was a weekend. So are we talking about the right date or the right stock? Yeah. So January, I'm right here, right? 1/6/17 and then 1/9. So this is it right here. I'm not sure what you're looking at there, Dave. Let's see. John's asking, great point there on the breakout, the downtrend. Yeah, I'll show you at some other time. I'll get into the redefining trend and the technology and the work behind using the 3C and all that I'm talking about now. It's a big topic. We have another topic called relative symmetry that is an amazing thing that nobody has ever talked about except me, and I talk about it very little, but I'm probably at someday gonna maybe even include that, and maybe, who knows, maybe another book, I don't know, or a white paper or something. It gets really deep. I try to simplify this stuff as much as possible, but we've done incredibly deep work on this stuff. I mean, I've dedicated my life to this. This is 33 years of doing this every day, and I dedicated my entire life to this. I've breathed and slept these stock charts and all this stuff that I'm showing you guys, and much more, for my whole life since I was a teenager. And there's a lot behind this. This isn't just guesswork and hocus pocus or something that we found worked last year. There's a real body of work and knowledge behind this that is just incredible. If you knew, you'd probably be as confident as I am in it. Anyway, let's see here. Is Beat a pullback buy today? BEAT. Well, I've been watching Beat. I didn't look at it as of the close here. Well, this isn't really a pullback buy because here, for a few things, but it is a low cheat. All right, and And it's really stretching it because it just broke the downtrend. See right here? So this is somewhat of a what I was just saying, a redefining trend. This could end up redefining its trend, and I would rather see it maybe move sideways here a little bit and then turn up from there, and then that would be the spot that I would really optimally like to buy. But this is sort of a creative low cheat. If I were to try to buy the breaking of a downtrend, I would want some type of pivot to be right at that point, and this would be how I would probably do it if I were to stretch my rule, which I wouldn't, and I don't. In this particular case, you can say, yeah, you had a big base here, and it wedged up, and you never really got a pivot to form. And this is the concept of relative symmetry, that basically if you don't get it right over here, you're going to have to pay the price somewhere after that point. So for instance, if you run straight up off the lows, what would normally be a normal natural reaction might be a much worse reaction because you never got the time. Might be a much worse reaction because you never got the time where it came in and was able to shake out some of those hands. So now there's going to be more. The theory is that there's going to be more weak holders that will create even a more violent shakeout or a longer period of declining. And this just proves that. This is a perfect example of how this natural reaction becomes unnatural and takes a lot longer, where it's almost going into a full base now. Because why? Well, because see, it ran right up the right side and never got a chance to really put in that right side and spend the proper amount of time that it needed. All about supply-demand dynamics. GNMK. Okay, let's see. Well, I've been watching this, and we talked about this a few times in the room. Um, I was getting constructive on it right here when it had that big day. Now, you see, what I'm looking for, once it breaks out, I don't mind it pulling back a little bit, but I want to see it resume. I would rather see this back a new high ground really quickly than sort of just flobbing around here. So we're one, let's see, 1, 2, 3, 4, 5, 6 down days, 1, 2, 3, 4, 5 up days. So we've got actually more down days than up days since it broke out, and you can see it's lower. This could still be building the base. If this tightens up right here, and really maybe it tightens up for a few days and turns up from here, you would get, what is that? That's just a little mini 3C. And that's what we call fractals, where you get a pattern inside a pattern. So I like when I see a small pattern inside a larger pattern, as long as that small pattern is part of the larger pattern. So it's getting tighter and tighter and tighter, which means that law of supply and demand is just working itself through in a very natural way, and that can form the line of least resistance. But looking at this and how we had this big up move and it hasn't been able to follow through, it's a little bit suspect. So I have to see it tighten up and start turning through there. And even then, I'm going to watch it very carefully, and I want to keep a tight leash on it. So I have been watching this stock, and this is on our right here. I'm looking at. Let's see. Yeah, it's on our watch list right here, tier 1. So if it shapes up a little more, we would maybe consider it. But right now, no. All right, so I'm going to wrap this up. I hope this has been helpful. I think that it probably shedded some light. I tried to improve this a little bit than from the previous one. I hope that I hit that mark. So I'm sure you have a better understanding. And as I make buys and bring up stocks on buy alert, even if I don't buy them, you'll see these things setting up, and you can experiment with them for yourself. If you're new, just trade small, and even if you buy 100 shares of a stock and you're just in it just for the sport of it to learn. And if you're just starting this, just get involved. It's important to take action. It's important to make trades. The best thing you can do is make trades. Take the knowledge and actually put it into action, because then you're going to learn more from that than anything else. But you have to take action and make some trades. And if you're too nervous or you don't want to risk the money, then you just trade smaller. And by trading smaller and getting success, you'll get the confidence to trade larger and eventually make some real progress. But again, like I said, you got to make an investment. You got to make an investment in yourself. Bill, thank you. And we'll try to do, I know I'm always saying we'll try to do tutorials, but I try to do the tutorials when we're on downtime. Like if the market rolls over here and we get into it, there's no stocks, then that's where I try to do more tutorials. Lately, there's been enough to talk about and to trade and buy alerts and stuff that we haven't had a lot of downtime. But if we get some downtime, I'll increase the number of tutorials. If you guys have any suggestions, anything you want to talk about with tutorials too, let me know. Try to do that. As far as the intraday stuff, I'll try to put something together where we can look at some intraday. I just don't have a big request for it. Most people are not putting doing intraday trading and day trading, so it's not something that I've been asked for that often. But for the small number of people that want to talk about that, I will put something together. All right, and let's have a good rest of the week here. 20,000. We closed above it, and now is where the rubber meets the road, I think, and we'll see what happens from this point forward. All right, have a good rest of the week. Monitor the platform. Talk to you guys later. Bye bye.